Good morning, everyone. Thank you for joining us for today's webinar, What is Life After Coronavirus? HR Compliance in Your Government Entity and New Guidance of Legislation, presented by Rea Associates, a top 100 regional CPA and business consulting firm with offices across Ohio. My name is Imani Fields, and I will be moderating today's presentation. Before we get started, there are a few housekeeping items to cover. First, if you have any questions during today's presentation, you may enter them into the chat box on your screen. We will try to answer as many questions as we can at the conclusion of today's presentation. However, to be respectful of your time, we know that we will not be able to get to them all. Therefore, following today's webinar, we will review all questions and send out the answers via email as soon as we can. When you receive this email, you'll also receive the recording of today's presentation, as well as a link to participate in a very short evaluation. Please take a few minutes to share your thoughts about the presentation as a whole, the information provided, and our presenters. Your feedback is important to us as we determine future webinar topics related to the current COVID-19 crisis. Also, if you'd like a copy of today's slides, you will find that they're available in the handout section of the webinar dashboard on your computer screen. Please note that the resources presented today are for informational purposes only. Rea Associates does not provide legal advice and will not make management decisions for your organization. You're encouraged to consult with legal counsel of your choice prior to implementing any policies or procedures within your organization. Today's webinar will be given by Renee West, Zach Morris, Derek Conrad, and Chad Gorfido. Renee West is a senior manager and leader of Rea Associates HR consulting practice. With more than 27 years of experience in the human resources, Renee specializes in assisting organizations within the manufacturing, nonprofit, contingent staffing, food, and other industries with their HR challenges. She is also currently serving on the Ohio Society of Human Resource Management's Board of Directors as Central District Director. Zach Morris, a principal and director of governmental services at Rea Associates, has more than 15 years of experience in the accounting industry. Zach is responsible for the review and supervision of government and not-for-profit clients and staff. He also actively participates in business development for the segment. Derek Conrad is a principal at Rea Associates with more than 15 years of experience in the accounting industry. Derek is responsible for being in charge of government audit and engagement, also specializing in governmental financial reporting, governmental auditing, internal control structure, and fraud risk. Chad Gorfido is a principal at Rea Associates with more than 10 years of experience in the accounting industry. Chad is in charge of governmental and not-for-profit audits. He's also responsible for day-to-day audit, client communications, and ensuring the timely completion of every audit we take on. Today, Renee will hone in the updated regulations and policies such as the CARE Act, Shared Work Resources, and your government entity. Zach and Derek will discuss the House Bill 197, and lastly, Chad will discuss the OMB memo and how this affects your workforce and their families during today's COVID-19 crisis. And Renee, you can take it away.
Thank you, Imani. Good morning, everyone. This is Renee West from Rea Associates. Thank you very much for taking the time to attend our webinar today. We hope everyone is continuing to remain healthy during these challenging times. Part of our goals today are to provide you with current resources to continue to move through the developments with paid leave and other legislative updates. Please keep in mind this is a fluid situation and many forms, many guidelines will be forthcoming as we continue to move through the next couple of weeks. Next slide, please. Part of what we would like to talk through today is help to connect some dots, as there are a lot of acronyms and words out there with these new legislation and new laws. Specifically, we'll talk about the Families First Crisis Response Act and also the corresponding leaves for each of those. We'll also touch a little bit on the CARES Act and the different programs that encompass that in assisting employers and employees as well. We'll also touch on the Shared Work Ohio program, speak to some of the current issues and processing through the unemployment process. We'll also provide you with some resources for government-mandated employer workplace postings for the new FFCRA regulations, and also talk about workplace safety as well. And as we move through the slides, we'll also continue to provide resources for you, but we also request that you continue to visit Rea's COVID-19 resource page, where we have a number of resources available for you. And these are updated daily with the most current changes to help keep you abreast of any upcoming items as well. Next slide, please. First, let's talk about the Families First Coronavirus Response Act. And this was actually the legislation that was put through towards the end of March. And this encompassed two different types of leave. The first one, an Emergency Family and Medical Leave Expansion Act, which actually expanded the existing Family Medical Leave Act that has been in place since the late 80s. And the second piece of this is the Emergency Paid Sick Leave Act. You'll hear it referred to EPSLA, which became effective, both of these became effective on April 1st, 2020, and will continue through December 31st, 2020. Next slide, please. Eligibility for the leaves. Public sector employees are eligible for sick leave under the Emergency Paid Sick Leave within a general perspective. If you work for a public agency, including cities, municipalities, townships, or counties, parishes, or school districts, you're eligible for this leave benefit. Federal employees are not likely to be eligible, and there are some exceptions to this. And those exceptions can be found on the Department of Labor website that we have referenced at the end of this presentation. Next slide, please. So let's talk about what actually the family medical leave and these emergency leaves, what are the criteria behind them? All employers with fewer than 500 employees must comply. There is the ability for those companies that have less than 50 employees to put in for an exemption from this leave based on it being a hardship for the organization. And again, we do have resources for this on our Rea page as well. Employees within an organization that can be eligible for this leave must have been employed at least 30 calendar days prior to taking their leave. Next slide, please. There's different criteria for being eligible for the leave. So leave is available when an employee is unable to work or telework due to need to care for a son or daughter under the age of 18, or if the child's daycare is closed due to the coronavirus outbreak. The initial 10 days of this emergency family leave is unpaid. After 10 days, the remainder of the leave is paid. Next slide, please. The employee can elect to run their existing paid, like their time off, either sick leave or paid time that they might already have through the company, concurrently with this 10-day period. However, the employer is not permitted to require the employee to use that time. That's very critical that you can say we have the time available for you to use, but again, the employer cannot require them to do that. In these situations, some employees might qualify for the emergency family leave, and then they might qualify as well for the emergency paid leave. Next slide, please. So we'll talk a little further about what that looks like as to that paid piece. So after the 10-day paid leave, unpaid leave expires, employees are able to be paid 2/3 of his or her regular wage under the Fair Labor Standards Act. Paid leave is a maximum of $200 per day and $10,000 in total for the duration of the leave. And the max time is up to 12 weeks. Next slide, please. So as we talk about this, what are the criteria for an individual to be able to request this emergency paid sick leave? And the criteria here are listed. Either the employee cannot work or telework because of either a subject to a federal, state, or local quarantine or isolation order. they've been advised by a healthcare provider to self-quarantine, if they themselves are experiencing symptoms of the virus, or if they're caring for a person within their family due to the isolation order as well. And also if they're caring for a son or daughter or employee, from an employer whose daycare is closed. Next slide, please. And as we talked about, there are opportunities. Can an employee use emergency paid sick leave to cover the first 10 days of the normal pay that is not traditionally paid? And if they qualify for that based on the criteria that we just talked through, then yes, they are eligible to take that. Next slide, please. The Emergency Paid Sick Leave Act, as you see here, has provisions for the amount of pay an individual is able to receive. Length taken for the following reasons listed below are paid at the employee's regular rate of pay, subject to a limit of $511 per day and $5,110 total. Again, those individuals that are eligible would be those that are subject to the state quarantines. They've been advised by a healthcare provider, and as you see, following the additional criteria there as well. Next slide, please. And the last piece of the emergency paid leave talks through what is the compensation for an employee that is caring for a person, and not themselves, but a family member that is subject to the quarantine, or again, if their child, caring for a child or caring for a child due to not having daycare available, they are paid at 2/3 of their employee's regular rate, as subject to the limit as you see here on the slide. Next slide, please. This was one of the questions we received quite often from a number of clients relating to the child care. For those employees that you might have less than 50 employees within your organization. Again, there is the ability for an employer to request this exemption. So please, visit the Department of Labor website and also utilize the resources that we have here cited in this presentation, or contact us if you have questions. Next slide, please. Another big question that we have received is the question of, may I take 80 hours of paid sick leave for my self-quarantine and then another amount of paid sick leave for another reason under the Paid Sick Leave Act? Keep in mind that the total number of hours for which you receive paid sick time is capped at 80 hours under the emergency paid leave. So the quick answer to that is no, you can only take up to 2 weeks of that time. Next slide, please. This is another big question, and a very common question: is the leave under the existing family medical leave now paid? And that answer is no. There have been no changes to the current legislation and the current Family Medical Leave Act, where those that are off work due to serious health conditions of themselves or a family member, and that remains unpaid at this time. Next slide, please. Another question that we've received are the paid sick leave and expanded leave medical leave requirements retroactive? So are they payable prior to April 1st? And that question is no. The law did not become effective until April 1st, so moving forward, it will compensate from those days. It actually is effective from that day forward. What documents does an employee need to give an employer to request the paid sick leave? And the employee is required, especially if they are saying that they are under high risk or their doctor feels they need to be under quarantine. There is guidance on the Department of Labor website that also shares that the supporting documentation should be from the doctor stating the reason, the date, and the employee's name as well. And it is the employee's responsibility to request the leave from their employer. A lot of questions that we've received from companies are, do I have to mandate this, or do I have to go out to each employee and say this is what this information is? But we'll talk about how to inform your employees of that as we go through in a few slides. Next slide, please. This is another big question that we have received, and that is, may I collect unemployment insurance benefits for time in which I also request pay for the sick leave? And the answer to that is no. Individuals that are on unemployment, they are two separate things. They might be laid off due to the coronavirus, and that is the compensation that is through the state. And those that might have either medical conditions or other criteria that meet the leave would be separate from that. Next slide, please. As we talked about, the paid leave updates are very extensive, and there's a lot of information that continues to move forward. And again, please feel free to visit our site at the end of this assessment too, that will give you this presentation, that will give you some additional resources as well in reference to these specific updates. Next slide, please. So we also want to talk about the CARES Act, which a number of you, I'm sure, obviously have heard about in the news. Originally, this was the stimulus package that was signed into law by President Trump on March 27th. And this program will provide $2.2 trillion in a cost. So the impact will be closer to $7 trillion based on direct relief, grants, and government-supported loans. Next slide, please. The CARES Act covers a number of provisions, from food assistance to student loans and internet access in rural areas. Also, one of the biggest pieces of the CARES Act are the family stimulus checks, of which I've heard are starting to hit direct deposit accounts here over the weekend. And again, these stimulus checks will be sent out to individuals based on income, and are hoping to help us to continue to pay bills and continue to stimulate the economy. Next slide, please. The CARES Act also provides programs for small businesses to assist with ensuring that they can keep their employees working, and also receive some benefits and cost savings to the employer. And one of those programs is the Payroll Protection program that is through the Small Business Association. And again, we have information on our website that talks through the specifics and the requirements to participate in this program. And there is also $500 billion in the U.S. Exchange Stabilization Fund to provide loans and guarantees for those hardest hit industries to assist. We're also hearing that they're talking about an additional potential stimulus package for putting some of these funds back in, as there was, as you could think, a huge response nationally to employers providing applications to participate in this particular program as well. Next slide, please. The CARES Act also provides refundable payroll tax credits. It has the ability to defer payments of payroll taxes, changes to net operating loss provisions, and also changes to certain depreciation provisions. Next slide. One of the biggest pieces of the CARES Act is the federal pandemic unemployment compensation. So the act was able to provide $250 billion boost to unemployment insurance. Individuals are now able to apply immediately. They've eliminated the waiting period. It also expands the eligibility to those employees that typically under previous unemployment compensation would be ineligible. Those individuals are not now eligible for unemployment. Self-employed workers, independent contractors, and those that haven't hit the minimum hours of the benefits. I am hearing also that per the governor last week, I know that the individuals within these categories are just now, within the next week, going to be able to apply. I'm sure many of you have heard and expect the unemployment system is very overloaded right now due to the volume of claims and the processing. So there is a lot of steps that they're trying to take to ensure that the rollout of this continues and that individuals receive their checks in a timely manner. The CARES Act and this massive boost also included an additional $600 a week to individuals that are currently on unemployment. And the $600 a week is actually from the federal government. So that would be on top of what the state unemployment benefit would be. And this will extend benefits an additional 13 weeks to allow individuals up to a total of 39 weeks of compensation through the unemployment system. Next slide, please. As of April 1st, with the new acts in place, there is also the requirement for employers to have the required Department of Labor workplace posters in place so individuals are able to know their ability to request the leaves through these FFCRA programs. There is a link at the bottom of this presentation. And the next slide too will give you information on how to access these. But basically the best practice is for employers to post this in a conspicuous place like lunchrooms. For those remote workers, I know, and obviously a lot of the nation is working remotely right now. Companies can, put this poster on their intranet. They can, have their employees view it remotely that way. And only sharing with current employees. There is no need to share or send this out to any laid off or prospective employees. They would, of course, receive that if and when they were brought back to work. Next slide, please. As we mentioned, there are two new posters that are out there. One particularly is for non-federal employees that you will see cited here at the bottom of the slide. And the second is for federal employees. Employers, you are able to click this link, and these are free posters that you can print. You also have the opportunity to utilize those sources online where you can order posters. But this is a free resource, so we definitely would request that you utilize this to ensure your compliance with these notifications. Next slide, please. And as we move forward and we start talking about individuals going back into work or people being recalled or just the safety overall of workplaces, the Department of Labor has worked with OSHA to also put together a nice posting for employers to keep the focus on safety, the hygiene, the 6-foot distance, anything that we need to ensure as we start to have workers returning into the space, and also for the protection of those that are still here and working in those essential businesses. So it's very important that employers continue to think of the safety and also moving forward, what does that look like? And there's a resource for you there. Next slide, please. And as we talked about, Rea's resource COVID page, please take time. This is a great resource for you that will help you with any questions that you have, not only from an HR perspective, but from a tax, audit, all different facets of business. And we've also included here the link for the unemployment office and their task force associated as well. Next slide, please. And at this point, we will turn it over to Zach Morris and Derek Conrad.
All right, thank you, Renee. Good morning, everyone. I just want to echo Imani and Renee's comments for earlier. appreciate everyone taking the time out of their day to sit through the webinar, and I hope that the information we're providing today is relevant and finds everyone safe. As we work through this, Derek and I spent some time on House Bill 197. I know there's a lot of summaries out there for different areas of the bill. And so we're going to cover just the sections of the bill that really apply to the COVID response. And sections 1 through 6 of the bill were on tax code streamlining and correction. And then really sections 8 and beyond were a lot of the corona response. So that's what we'll be covering today. And then from the BWC perspective, the first slide of this section might be a little different than what came out in the packet, just do some recent emergency sessions on Friday. So next slide, please. Like I said, take a look at the BWC dividend. The board met virtually in emergency session on Friday in response to Governor DeWine's call for state agencies to do what they can to help the state business community withstand the COVID challenges. With all the temporary closing, stay-at-home orders, and a record number of Ohioans applying for unemployment assistance, this is one of the things that BWC did on Friday, really in response to that request. And on Friday, as I mentioned, the board met and they approved a $1.6 billion dividend to Ohio employers. In essence, this dividend equals about 100% of the premiums for policy year 2018. Of that total, $1.4 billion is going to private employers and about $200 million is going to the local government taxing districts. And they anticipate checks will start being issued later this month. Now, keep in mind, we thought this was an important slide to post and consider for determining where your entity will need to post this dividend. With the rebates that were previously issued, the Auditor of State's Office had put out guidance on making sure that those rebates went into the funds that had originally paid the premium. So what we're looking at here is we would expect some further guidance from the Auditor of State's Office subject to these rebates and how they should be posted. But that's just something to think about as those checks start to come in. Next slide, please. All right, now we'll cover a little bit more of the House bill and some various sections in there. And Section 8 dealt with opportunity for the EPA to issue an order in regards to the executive order requiring a public water system to restore any service that was disconnected, requiring a public water system to waive fees for connection or reconnection, and prohibits a public watering system from disconnecting customers because of non-payment. This allowed the director of the EPA to issue an order that would allow the temporary law for this. And upon searching the EPA, many of you are probably aware, but effective March 31st of 2020, public water systems are prevented from service disconnection during the state of emergency. So the Ohio EPA acted on this April 3rd to address the temporary law. And the biggest item to consider here is it is upon customer request. The public water system is required to reconnect any shutoff account that is due to non-payment, and that dates back to January 1st, 2020. And then upon reconnection, as is mentioned in the House bill, we are to waive connection fees, but not prior balance or future bills. So that's an important item there to communicate with the requested persons to reconnect, is that those connection fees will be waived, but they still owe the prior balance and future bills. And then the biggest piece is on the operating side, is provide customers guidance on flushing, piping, and fixtures when their water service is reconnected. Next slide, please. Can I get next slide? Thank you. Section 11, the licenses. Any license, permit, charter, registration card, or other that is issued by a state agency or subdivision. Basically, under the executive order, notwithstanding the date of the action respect of the license, the person shall take action no later than the sooner of either 90 days after the emergency ends or December 1st. So in essence, what we have is if you have licenses expiring that require action, it can be done within 90 days of the emergency ending or December 1st. And with that, unless suspended or otherwise subject to disciplinary action, then there are no other laws delaying taking action to maintain validity of the license. So in essence, the boards will not take action on somebody for not meeting the exact deadline of their license as long as they did it within 90 days of the order or December 1st. Next slide, please. Okay, Section 12. This is one that I've seen a lot of summaries on, and there's been a lot of questions on in regarding to the Open Meetings Act. And really, it goes to a hearing, meeting, or public body as defined by the revised code. In essence, during the emergency, these hearings and meetings may be conducted by teleconference, video conference, or similar electronic technology. And the following apply, is that any resolution, rule, or action that is taken during that time period has the same effect as if it did in a normal course of meeting. And members of the public body who attend these meetings by teleconference, video conference, or whatever that technology is, shall be permitted to vote and are counted for the purposes of determining a quorum. So that's really the biggest piece of this, is noting that these meetings can be done virtually now, and under the temporary law, they will be counted for purposes of the quorum. Okay, the next slide. Thank you. And looking at this slide, really I'm going to cover, in order to hold a virtual public meeting, there are several obligations that have to be met. The entity must provide notice that the meetings will be held pursuant to these procedures. The notice must specifically provide the media that have requested notification and any party required to be notified at least 24 hours before the meeting. And the notice must be provided using a reasonable method. So it must determine the time, location, and manner by which the meeting will be conducted. And if it is convened on an emergency basis, the body must immediately notify the media and those parties required to be notified. Those holding a virtual meeting must ensure that the meeting is accessible to the public. So those examples would be live streaming, broadcasting, local radio, television, cable. There's a number that are listed. And the body must ensure that the public can observe and hear the discussions of the public members, and whether the member is participating in person or electronically. Keep in mind, when conducting these hearings, there must be a method that will allow those to receive testimony or physical evidence and will allow the public to participate. And then lastly, the biggest thing is careful planning and thought need to be given to parameters of the Open Meeting Act when it comes to executive session, and making a determination of how executive session will be acted, if there will be a pause placed on part of the feed, whatever that may be, but it will take some planning ahead of time. One of the things I want to make sure I reference is the Ohio Attorney General's website. Dave Yost has a significant amount of information on open meetings and an FAQ on his COVID-19 page, like I said, under the open meetings section of his webpage. So there's a lot of good information in there, and contact information for those to get a hold of at the Attorney General's office with questions. Next slide, please. And really, like I said, this with the nature of the House bill jumping around to various entity types. Section 15 deals with the Board of Education or school district shall be permitted to do either following to make up the days and hours for which school is closed due to the Director of Health order. They may require students to access and complete classroom lessons posted on the district or school's website in order to make up the hours, and they may amend the plan to make up those hours. If they don't have a plan, they may adopt such a plan for making up those hours. Next slide, please. All right. We touched on earlier on various licensor types from the renewal perspective. And again, this deals with the license, including certificate or permit or authorization under a state licensing board. And a lot of it's specific to the Director of Health orders under the closure of the K-12 schools. speech, OT, PT, psych, social work, and intervention specialists. And really what is the highlight of this section is that the practice of therapy type or services impacted by this order for the close of the K-12 schools, and these persons holding licenses above may provide services within the scope of their practice authorized by the license in either electronic delivery or telehealth communication to students enrolled that were receiving such services prior to the order. And this goes on to say the licensure board will not take disciplinary action against a provider solely because the services were provided in this manner. And one of the reasons we felt this important to include is for the schools on the webinar that participate in the Medicaid school program and the ability to provide billable services under that program and then bill and receive funds for them are impacted by this order. So it's important for the therapists, the administrators, and the boards to communicate with this process. Next slide, please. All right, Section 17 has a lot to do with, again, with the closure of the K-12 schools and that environment, and indicates that the schools are not required to perform assessments. Students that did not have assessments delivered will not be excluded from the enrollment counts for the 2020-21 school year, and they shall not count in determining if they're subject to withdrawal. Next slide, please. And the second slide of this indicates the Department of Ed will also not publish state report card ratings. In the absence of these ratings shall have no effect on the sanctions, penalties, and shall not create new starting points for those on multi-year ratings. For those on multi-year ratings, they will use the previous year or subsequent years in consideration of action. Next slide. In essence, this section of Part 17 indicates that a student shall not be retained in third grade under the revised code solely based on academic performance and reading, unless there is principal of the building and teacher collaboration agree that student is not prepared to be promoted to the fourth grade. Next section. And the last part of this deals with community school sponsor evaluations, and that these evaluations shall not include ratings for academic performance. So ratings will be based on parts B and C of the applicable revised code, which are really the applicable quality metrics and administrative rules, and will not have the academic rating piece. But note that the parts of B and C of the code, sections that would require action to occur while school is in session will not be considered during the closure period. So those items will not be included in the community school sponsor evaluation. So really the four slides related to Section 17 of this really deal with looking at it from our perspective on the auditors, is looking at different testing parameters in Title I and different compliance testing requirements as they will impact the 2019-20 school year, and as we move into the summer, and how these could change audit procedures in the compliance environment. So with that, we'll go on to the next slide, and I'll turn it over to Derek.
Good morning, everyone. I'm going to move through the remainder of the House bill, and it's all relatively smaller sections, so we'll move through it relatively quickly to allow for questions at the end of the session. But starting with Section 18, what Section 18 did was it provided the Department of Jobs and Family Services with the ability to continue to make payments to publicly funded child care providers until the executive orders are lifted. So as we all know, child care centers were hit especially hard by this epidemic and the shutdown, and this should allow them to continue to receive some funding even on a limited basis, and it should provide funding even to those that have been shut down completely. Approved providers should continue to receive a flat fee from JFS that will be based on services provided from January 26th through February 1st. And I think the hope of this section is that even though it's limited funding, it should allow these child care providers to have a little bit of revenue stream so they can be back up and running as soon as the executive order is lifted. Next slide, please. Section 19, I'm not going to spend a lot of time on Section 19. Those were the sweeping changes to the unemployment program that Renee hit on. It's been pretty well publicized, but essentially what this section is doing is it's waiving the waiting periods, eliminating some of the job search requirements, and then some of the other disqualifying factors from unemployment benefits for the duration of the shutdown. Section 21, I removed it from the slide deck, but I wanted to touch on it real quick. I think it's been addressed by most entities, but it was the section that required county offices to remain open, at least certain limited departments, and these were primarily the county recorders, auditors, and clerk of courts. The section wanted land professionals and others that required property searches and title services to be able to receive those services even during the shutdown. But the section did allow the counties to have some latitude in determining how to proceed with that in the best interest of the public's health. So I think since then, most counties have shut down these offices to the public, but have provided access either electronically or through other means. Sections 25 and 26 directly tied to the auditor state's agreed upon procedures process. Currently, the Auditor State's Office allows for certain smaller entities to get agreed upon procedures in lieu of audits. And what Section 25 does is it eliminates a requirement that in the third cycle they get an audit. So currently, an entity could get 2 agreed upon procedures in back-to-back cycles, but then the third year required an audit. This section has waived that requirement, but it is on a case-by-case basis. So the Auditor State will probably determine that as they see fit. And then Section 26 goes into waiving some of the requirements for the agreed upon procedures themselves. The Auditor State's Office has a pretty detailed checklist for entities to determine who qualifies for an agreed upon procedure instead of the audit. And this section will give the Auditor State some latitude in determining maybe there's some entities out there that wouldn't hit a certain requirement, but they're going to go ahead and waive that for them this year, so they may be eligible for agreed upon procedures. I think it's important to note with both of these sections, though, that these are going to be case-by-case basis. There's really no universal language or guidance out there from the Auditor State's Office, so entities are really going to have to work with their auditors and probably their Auditor State regional offices to determine how this will apply to them. Section 27 primarily relates to OPWC, OWDA, and the Ohio EPA. And what it does is it allows for extensions to OPWC project schedules that are affected by the pandemic. So if there's a current project that's going on that's going to be shut down indefinitely or put on hold for any reason, this section will give you some ability to extend those projects out. But then more importantly, what this section does is it's going to waive penalties and fees associated with loans. So as Zach touched on with Section 8 of this House bill, some of the disconnection fees, penalties, interest, things like that with your utility funds may be affected. This section may give you a little bit of ability to work with these entities on your debt payments to see if you can't get some fees waived or pushed down the road a little bit. It should provide a little bit of assistance with some cash flow issues, primarily in these utility funds. But again, probably have to work with the individual entities themselves to figure out the impact. Next slide, please. Section 28, I'm not going to spend a lot of time on this one, but this one did extend the state income tax filing to July 15th. It will also trickle down to the local entities. This was basically to mirror the federal requirements and streamline the process a little bit. Next slide, please. Section 29 impacts those who are forced to work remotely, and then how employers should determine their place of work for local income tax purposes. Basically, what this section has done is it said that even though people are probably working remotely and working from home, they should be still treated as if they're working from the principal place of employment. So this means that employers don't need to necessarily worry about a person's place of residence and whether or not they should be withholding for that locality. They can just keep things status quo and avoid some confusion in the local tax arena. Section 31 kind of piggybacks off of some of Zach's slides about the Ohio Department of Ed programs, but this section is basically putting the Educational Choice Scholarship Program on hold. It's going to put a freeze on new students who are eligible, and basically it's going to limit the students who are eligible for this scholarship program to those who received the scholarship in 2019-20, or basically a student, a sibling of one of those students who is enrolled in an approved building. So this is basically putting a freeze on these buildings and who can participate. But ODE is currently releasing a lot of information regarding this, so this is something that you'd probably want to check their website to stay current on. Next slide, please. Section 32 is just about the election process with moving the primaries. Basically, everything's moved to April 28th. There will be limited in-person voting, primarily those with just disabilities that require in-person voting. And then Section 33 just allows for an appropriation to cover the costs associated with all of this moving the election process. So they've authorized $7 million, and then whatever isn't used this year is allowed to carry over to next year. Next slide, please. Not going to waste a lot of time on Section 34 and 35. That reappropriates $20 million in the state capital funding from a building improvement fund to an administrative building fund, but it appears to be primarily a temporary advance. Once funding is received, those monies will be repaid. So it should not have a tremendous impact on local entities at this point. And then Section 36 was just allowing the use of budget stabilization to basically balance the budget for this year, because we all know that the revenues will be impacted, but this allows the state to dip into that rainy day fund a little bit to balance that budget. And I think we can move over to Chad now. Next slide.
All right, thank you, Derek. Good morning, everyone. I'm going to talk about OMB Memo M2017, which was released in the past couple of weeks. And what this memo does is OMB is allowing federal awarding agencies to provide flexibilities and waivers related to certain compliance requirements for your federal grant funding. The key there is that it's allowing the federal agencies to provide those flexibilities. So this is not an across-the-board waiver of these requirements. So you're going to want to make sure that you're communicating with your federal awarding agencies and pass-through agencies and reviewing their websites and guidance to see which of these requirements they've waived or allowed flexibility on. Next slide, please. All right, going through what the OMB is allowing federal agencies to do, some of the key bullet points in that memo, starting with SAM registration. So awarding agencies can relax the requirement for SAM registration to expedite funding. So if you are applying for a federal award and typically would have to register on the System of Awards Management database, that requirement could be relaxed. So you're going to want to check with that federal agency or pass-through agency. The allowability of salaries and other project activities. So awarding agencies may allow recipients to continue to charge salaries and benefits to currently active federal awards, as long as it's consistent with the recipient's policy of paying salaries in an unexpected or extraordinary circumstances from all funding sources. So the key there is, one, to make sure that you do have a policy in place, that the federal awarding or pass-through agency is allowing you to continue to charge those salaries and benefits, and that you apply that policy consistently among federal awards, non-federal awards, or state funding. Allowability of costs not normally chargeable to awards. So we've seen a lot of situations where you may have a professional development grant or training as it relates to a federal grant, and those conferences or trainings have been canceled and refunds of those items are still up in the air. This would allow federal agencies to continue to allow you to charge that cost to the grant, even though that item was canceled. Prior approval requirements and waivers. Agencies are authorized to waive prior approval requirements. So a lot of federal grants have prior approval requirements for certain purchases out of those grant awards, and those federal agencies have the option to waive those requirements. Next slide, please. Exemption of certain procurement requirements. So agencies may waive procurement requirements specific to geographical preference, MBE, women's enterprises, and labor surplus. Extension of reporting requirements. So as you know, your federal grants have certain financial reports, performance reports, or special reporting items. This allows agencies to extend the deadlines of those reports up to 3 months beyond the original due date. Similarly with closeouts, so if you have a grant that closes out, typically there's some reporting requirements and procedures that are necessary to close that grant out, and this allows for awarding agencies to extend those deadlines. And finally, in the O&B memo, it does provide a 6-month extension for your single audit submission due date for all fiscal year ends through June 30th, 2020. So again, those are the key provisions out of that memo. But the main thing to take away is that you need to continue communicating with your awarding agency and pass-through agencies to see what steps they've taken to address what's in this memo and whether they are going to provide these flexibilities or not. So make sure you're keeping an eye out for that. You're reviewing your grants management systems and those awarding agency websites. Next slide, please. This slide is specific to schools. So the U.S. Department of Education allowed states to request flexibility related to certain EFMLEA requirements. As of today, ODE has requested this waiver for this flexibility. I believe it is currently open to public comment and should be approved by the U.S. Department of Education soon, hopefully. So what this waiver provides is for Title I grants, it would allow to waive the 15% carryover limitation. It would extend the period of availability or period of performance for your title grants. It would waive, for Title IV Part A, it would waive the needs assessment to justify the use of the funds. For Title IV Part A, it would waive the content-specific spending requirements, and it would also waive the spending restrictions on technology infrastructure. Lastly, it would waive the definition of professional development, which might limit the ability to quickly train school leaders and teachers related to distance learning techniques. Next slide, please. All right, I think we're going to turn it over for questions.
Thank you, Chad. Yeah, we're going to get into the questions for today. The first question that I have on here is for Renee. Does this week leave for EFMLEA include the first 2 weeks of leave, the 12 weeks of paid leave?
I'm sorry, I couldn't hear the very first part of that question. Could you repeat, please?
I sure can. Does the 12-week leave for the EFMLEA include the first 2 weeks of unpaid leave, or is it the 12 weeks of paid leave?
It would include any leave associated with that. So the first 2 unpaid would be part of that total 12.
Great. And then I have one more question for you here. If the county government is over 500 employees, do they still qualify? And I believe they're referring to FFCRA and EFMLEA.
I know that there is further guidance forthcoming from the government in reference to those that are over 500. So that is still questionable at this time. But at this point, I would say yes, pending any changes in legislation.
Thank you, Renee. And I have a question here for Zach. Has there been any guidance on payment for in lieu of transportation, any prorate?
I have not specifically seen any guidance to that, but it's something here after the conclusion of the webinar we can take a look at and maybe provide a response at a later time.
Thank you, Zach. My next question here is for Derek. Are employees who do not make the minimum weekly dollar amount for state unemployment eligibility still eligible for federal unemployment?
Oh, I might actually defer that to Renee.
Sounds great. Renee, do you need me to repeat the question there?
Yes, if you could. My call failed and I just had to call back in, so please do.
I will. Are employees who do not make the minimum weekly dollar amount for state unemployment eligibility still eligible for federal unemployment?
They would need to meet the state requirements first.
And then I have one more question off of that one, also regarding federal unemployment. Can people get the full $600 even if it's more than their normal wages?
They will look at what a wage history has been for individuals prior to them claiming. So again, there is the possibility that, yes, it's going to be that flat 600, but it depends also on what their base is from the state level. So they're going to intertwine somehow.
Great. And then our last question here, and also with me saying that, if anybody has any more questions, make sure you send them in, or else we'll end a little bit early. But I'm going to ask this last question to Chad here. What if an employee requests to change place of work to home address as it is in a non-taxing township?
I'm sorry, can you repeat that?
Sure. What if an employee requests to change place of work to home address is in a non-taxing township?
Derek, actually, do you want to take on that? Derek, do you want to take that one?
I don't know the answer to that. I'm going to have to claim ignorance on that one. The way I read that section specifically and how it's worded is you should really keep it as the principal place of employment. I guess I don't know how taxing authorities would view that. It almost feels like you're trying to circumvent some tax law at that point. So I don't know the specific answer to that.
And that's something that we can ask our state and local tax group and get back to a response on, from the perspective of if there is no local income tax effect and is not a taxing authority, if that may be more of a permanent address change, or if they're having stuff actually mailed to their home. That could be something we can ask our state and local tax group and get a response in the FAQ.
Great, thank you. And then we did get one more question in here. In regards to making application for the PPP loan, do you have any suggestions as to how to best capture total payroll for 501c3 entities? And whoever can best answer that question there.
This is Renee.
I do know.
Go ahead, Zach.
Oh, I was just going to say, that's something that we can look at from the perspective of we have a PPP task force, and we can get a response to that question specific to the nonprofit entities, and might even be able. There are some definitions out there on that, and some forms that a lot of times the bank will require, and the bank will help define what that is as a part of their application process. So that's something that we can also provide additional detail to in the FAQ by consulting with our experts on the PPP side.
All righty. I believe that was our last question. And like everyone said there, if we weren't able to answer your question, we will be sending out responses. We do have everybody's emails and things. So we'll get back to you about that. So thank you for joining us for today's webinar on what is life after coronavirus, HR compliance in your government entity, and new guidance of legislation. We hope the team was able to provide you with some valuable insight that will help you make sense of the current government recommendations stemming from the COVID-19 crisis. If you sign up today and realize you have additional questions, you're always welcome to reach out to Renee, Zach, Derek, and Chad directly. You can also contact any of our RAE team members by clicking on the People of the firm's website at www.reacpa.com, and that's REA. Don't forget to watch your inbox for an evaluation survey, access to the recording of today's webinar, and more. Thank you again, and we hope you all have a wonderful rest